Now we are in the most important section of this course. This is the opportunity section. In this section, we will look at how to identify trade opportunities by mixing all the things which we have learned till now. We will use the concept of time frames conflux. It means that we will ensure that all the time frames tell us the same thing. Once again, time frames conflux means we will ensure that all the time frames, monthly, weekly, daily, 60 minutes and so on, they all tell us the same thing. They all give us the same indication whether to buy or whether to sell. It is what I call time frames conflux. Now let us start off with this example. We are on the Mahindra & Mahindra's weekly chart. First of all, let us look at the overall market picture. We can see that the price is in a nice downtrend. The price is trading below the 50 EMA. And now we are here. We have got a nice rejecting candle RC at an important level of resistance. The wick is sticking out perfectly. Let us use the Fibonacci tool. We are in a downtrend, so we will connect the latest swing high, that is this point, with the latest swing low, that is this point. Now if you see that the pullback is at a perfect 0.618 level, it means that it is at a perfect retracement level. So now we have a nice bearish bias established from the weekly. We can also see that the bodies are getting smaller, some kind of a squeezing candlesticks. There is a nice rejecting candle, so we have a bearish bias from the weekly. Let us go to the daily chart. In the daily chart, we see that the price is in a nice uptrend. It is an uptrend, so let us draw a trend line. So here we go, we have a nice trend line drawn. In the daily chart, we see that the price is in a nice uptrend. Let me draw a trend line. So here we have a nice trend line. By connecting all the lows, let us analyze the candlesticks in the daily. We see that when the price is moving to the resistance area, we are getting this hammer-like pattern, which we call as hanging man when it is in an uptrend. After this pattern, we see a big red covering candle. It gives a clean bearish bias that the price is willing to go down from this area of resistance. And after this covering candle, we get another covering candle with an even bigger body, which confirms our view that price is indeed willing to go down. Now we have our bearish bias established from the weekly and the daily time frame. What we are now looking is the break of this trend line. Let us fast forward the chart. The next two bars are the red bars, red candles, and we see that this candle has clearly broken below the trend line. We can take a short entry here. We can sell this stock here with a stop loss near the or above the resistance and at least 1:1 target. To calculate the position size, to calculate the quantities easily with TradingView, you can use this tool, short position tool, because we are going short here. We can select this and we can select this area because we are going short here, somewhere here. Now we need to raise this red area to cover the stop loss. So we want to place the stop loss somewhere here, just above the red candle, the high, and a 1:1 target. We can see the risk reward ratio here. This 0.61 is the risk reward ratio. Now we want at least 1:1, so we can keep this. Now how do I calculate quantities? You can double click on this. Now here you can put your capital size. Let's say that you have 10 lakhs rupees in your Demat account. 10 lakhs is your trading capital and you are risking 1% per trade, that is 10,000 rupees. So you write 1% here and then you hit OK. So this 254 here is the number of stock which you need to sell. Let me double click on it. Let me select style and let me uncheck it. Now you can clearly see the risk reward ratio 1, quantity 254, stop loss is 39.25 points and the target is 39.15. If you increase the target, you see that the risk reward ratio is improving. If you reduce it, let us keep it again 1:1, 1:1. Here we go. Sorry. Yes. So now you can see that the risk reward ratio is set to almost 1:1, right? Let us now go to the 75 minutes time frame to dig deep. In the 75 minutes time frame, we see that the trend line has already been broken. Also, apart from the trend line, what is interesting is the 50 EMA is also broken. So this gives us an additional boost to our analysis that we are indeed weak on this chart. Let us go to the daily again to see how the trade went on. Now let me play this trade. See now how the price behaves, and we get the target. We get the target here within 8 to 10 bars. We are getting our target. Now let us see where does it go. Let me play this again. It goes down and at the support now. At the support gets rejected. Nice move from the support. Once again. Yes. So the trade went down all the way to support. Then it formed a W bottom. You can see there is a W bottom here. The support got respected and price again bounced a little bit. And now it is in a sideways market. So this is the time frame conflux which I am talking about. We want the weekly, the daily, the 60 minutes, all the time frames to tell us the same thing, that go short, this stock is weak, this will fall down. And then we will take our decision to enter the trade short. This was a A+ trade opportunity. There was a clear downtrend from the weekly time frame. The retracement was at a fib level 0.618. Then we went to the daily time frame. In the daily time frame, we had this nice uptrend which was broken by this trend line. If we analyze the candlesticks, we had the covering candles. In the weekly, if we look at the candlesticks, we had the rejecting candle here. The price was trading below the 50 EMA constantly, and this rejecting candle was beautiful. The wick was sticking out perfectly at the resistance, and the price gave a big down move, as you can see, and our targets were achieved comfortably. I took this example because I had traded this chart and made good amount on this one. I hope you understood this example. Thanks for watching and goodbye.